Hey everyone, and welcome back to Collin Investing. Today, we're diving deep into the ever-shifting landscape of global finance, sparked by some major moves and countermoves in the US-China trade relationship. We've got tariffs, tech, and maybe even a little bit of Musk magic to unpack, so buckle up, because this is going to be a wild ride. First up, let's talk tariffs. You've probably heard whispers of a trade war brewing, and it's not just whispers anymore. Trump's back in the headlines, and he's wielding his favorite weapon, tariffs. But here's the thing, it's not as straightforward as it seems. You remember the art of the deal? Well, it seems like it's still in play. Many analysts see these tariffs as more of a negotiation tactic than a long-term strategy. Trump's using them to get leverage, to get concessions in other areas. Think of it as a classic good cop, bad cop routine, but on a global scale. And it's not just about the US and China. We're seeing a ripple effect across the globe. Take the tech sector for example. Companies heavily reliant on global supply chains, like Tesla, Nvidia, and Apple, are feeling the heat. The uncertainty surrounding tariffs is making investors nervous, and we're seeing that reflected in their stock prices. But here's where it gets interesting. China's not just sitting back and taking it. They've announced their own set of countermeasures, including tariffs on US energy, imports, and agricultural equipment. They've also launched an antitrust investigation into Google, a move that's more symbolic than anything else. Given Google's limited presence in China now, the most significant move by China is the export control on key metals, like tungsten, which is crucial for industries like electronics and defense. China dominates the global tungsten market, so this move has the potential to disrupt supply chains significantly. But here's the kicker, despite all these moves, the market reaction has been surprisingly mild. Why? Well, it seems like the market's getting used to Trump's tactics. It's like the boy who cried wolf. After a while, people stop panicking playtists. China's response has been relatively restrained. It's like they're saying, we can play this game too, but we're not going to escalate it just yet. Here is still room for negotiation, and both sides seem to be aware of that. Now, let's shift gears and talk about another major development. Trump's taking aim at US government agencies, and he's enlisted the help of none other than Elon Musk. Their first target, the US Agency for International Development, or USAID. Why USAID? Well, it's a big agency with a big budget, around $50 billion annually. Trump and Musk see it as a symbol of government waste and inefficiency. They're also not fans of its mission, which is to promote democracy and development around the world. Musk has even gone so far as to call USAID a criminal organization. Strong words, right? And it's not just talk. Trump has appointed a new acting administrator for USAID, and he's delegated significant authority to a close ally of Musk's. This is a big deal. It's not just about cutting costs, it's about reshaping the role of the US government, both domestically and internationally. And it's not going unnoticed. Critics are sounding the alarm, crying that this is a power grab, a way to dismantle government agencies and replace them with loyalists. Now let's talk about the implications for the stock market. All this uncertainty, the trade tensions, the government shakeups, it's enough to make any investor nervous. But here is the thing, the market's been surprisingly resilient. We're seeing a bit of a seesaw effect between the Dow and the Nasdaq, suggesting that investors are still hungry for opportunities, and despite the risks, here is still a sense that cooler heads will prevail, that deals will be made, and that the global economy will keep chugging along. Let's also touch upon the recent jobs data. The December JOLTS report showed a slowdown in the labor market, with job openings falling significantly. This could be a sign that the Fed's interest rate hikes are starting to bite, and it's adding fuel to the debate about when the Fed might start cutting rates now. All eyes are on the upcoming debt issuance plan from the Treasury Department. This might sound boring, but trust me, it's important. Investors are watching closely to see if the Treasury will signal any changes in its borrowing strategy, particularly when it comes to long-term debt. Last year, the Treasury shifted its focus to short-term debt, which helped ease concerns about rising long-term yields. But with the new Treasury Secretary in place, there is uncertainty about whether this strategy will continue. Any hints of a change could send shockwaves through the bond market, and that could spill over into stocks. And speaking of stocks, let's talk about AMD and Google. Both companies reported earnings recently, and the market's reaction was well mixed. AMD beat on earnings but missed on revenue for its crucial data center business. The stock took a hit in after-hours trading, dropping over 8%. It seems investors were hoping for more from AMD, especially given the hype around AI GUD. On the other hand, missed on both earnings and revenue, the culprit, slower growth in its cloud business and a massive increase in capital expenditures, largely driven by investments in AI. The stock also dropped sharply after hours. So what's the take here? Well, it seems the market's getting a bit more discerning when it comes to AI. It's not enough to just talk about AI. Companies need to show real results, and they need to do it efficiently. Now, before we wrap up, I want to address the elephant in the room: the potential for a trade war. It's a real risk, and it's something we need to keep a close eye on. But I don't think we're headed for a full-blown trade war just yet. Both the US and China have a lot to lose from a prolonged trade conflict. And while Trump's rhetoric can be unpredictable, he's also a dealmaker at heart. I think there is still a good chance that the two sides will find a way to resolve their differences, even if it takes some time. So, what does all this mean for you, the investor? Well, it means that we're in for a period of uncertainty, but uncertainty also creates opportunities. The key is to stay informed, to do your research, and to be prepared for anything. That's why I am here, to help you navigate these choppy waters. I'll be keeping a close eye on all the latest developments, and I'll be sharing my insights with you every step of the way. So if you haven't already, make sure you are subscribed to my channel, Collin Investing. Hit that notification bell so you don't miss any of my updates. And if you found this video helpful, please give it a thumbs up and share it with your friends. Remember, investing is a marathon, not a sprint. There will be ups and downs along the way, but if you stay focused on your long-term goals and you make informed decisions, you can come out ahead. Thanks for watching, everyone. I'll see you in the next video. Stay safe, stay informed, and keep investing wisely.